Yo, I'm Brendan. Today I'm going to share with you, number one, the results of investing with Vanguard for the last 7 years. Number two, my review of what it's been like to use this service. And number three, despite my decent results so far, it is actually time to make a change from what I'm investing in, and so I'll show you that move also. So let me show you my returns and you can see what I'm talking about here, because now they've developed this app that is really user-friendly, that is really kind of exciting to get into and see, wow, look at what's happened over time. This has been really great. Well, hopefully it's been really great. I guess it depends on how you're investing. For me, I feel like it's been really great, and so I'm excited to show it to you. Whenever I first open the Vanguard app, this is what I'm greeted with, which is my all-time returns, and then we can click into that even further to get more detail. So let's do that now. Because we're only partway through the year, if I click on year-to-date returns, we don't actually get any kind of percentage. We'd have to do some math ourselves to figure this out. But overall, despite not making any kind of new purchases, which means new investments into Vanguard, I've only withdrawn $234. My account this year has already gone up $7,700, which is great. And last year was absolutely epic. This was one of the best years in the stock market since I've been alive and an investor. And so it was really incredible to watch this happen. Our accounts overall got 25.8% returns for the last year. And that's from last April to basically today. What that means for us in more layman's terms and something we can actually understand is our account value went up by almost $21,000 and we did nothing. We sat around and watched Netflix and ate burritos, and I shopped for race cars online even though I didn't buy any, and we just enjoyed the fruits of our labor, which was no labor. The last 3 years haven't been quite as well because, well, welcome to 2022. But even still, with the stock market not performing all that well, we still got an 8.7% return. And so it's kind of funny because in terms of dollars and cents, the last 3 years, our returns are almost the exact same as they are for the last 1 year. The joys and pains of the stock market, right? And now if we look at the 5-year view, it's been a lot better than that. 13.4% rate of return, which means our investments have gone up by just over $43,000. And again, we've done no work. I'm not like running an apartment complex. I'm not taking on a side hustle. This is just growing on its own because we've been invested. And now if we zoom out all the way as far as we possibly can from the day I transferred money into this account, which was August 1st, 2017, all the way till today, our rate of return has been 12.8% and our investment returns have been $47,000. For me, that all sounds good. Like those are pretty big numbers and I like that. But the really exciting thing is whenever I look down here and I look at purchases versus ending balance. So what this tells me, purchases and withdrawals, I've put in a total of $58,000 into Vanguard. That's happened over the course of time, and it's taken quite a while to do that. If I remember correctly, I rolled over an old IRA that I had from somewhere else at that time, and so that's why that initial balance like jumps right up to 20 grand, because I didn't start with zero. So this is probably more like 10 years worth of investing as far as the total number here. And so it took me 10 years to scrape together $58,000 and set it aside and put it into Vanguard and live the rest of my life without that money. For me, that was a lot of work. And then the funny thing is that we got $47,000 in returns for doing nothing. No extra work. So if my quick math is correct, about 44% of our total account balance here, which is almost half of it, is just due to the returns themselves. And if this doesn't get you excited about investing, I don't know what will. If we'd have just saved that money in a savings account, we'd probably have what, $59,000 or $58,500 because we wouldn't have got hardly any interest in it. But because we had it invested, it's almost doubled over the last 7 years. To me, that's extremely exciting. Now, so far we've been looking at this chart, which is the overall balance. So we can see whenever I started, I transferred in about $19,000 and then over time it's gone up. And this has been the total account balance. If you want to, you can just click over to returns and see exactly what the account's done in terms of, is it getting positive returns for us or negative returns for us. And you can see we've had a couple of pretty substantial downturns here. You know, our returns right here at the beginning of 2020 were doing pretty good. We were right there at about $10,000. And then you remember 2020, it wasn't great. Our $10,000 in returns went down to about $1,800. So we were almost wiped out back to zero. Thankfully, we didn't sell, we stayed invested. And over time that went way back up. And our returns again peaked at the very, very end of 2021 at about $38,000. And then watch this roller coaster ride back down for like the next 6 months after that. Boom, down to 16.3. So it more than halved right there in those 9 months at the beginning of 2022. If I was watching this account every day, that would be borderline terrifying. In a way, I'm kind of glad that Vanguard isn't a more quick, savvy, Johnny on the spot kind of service, because those kinds of things can make you nervous. Some people see that and they say, it's time for me to get out of the stock market. Pull the money out. We'll hide it under a mattress in cash or something else. But we didn't. We left it in there. And because of that, now we're knocking on the door of $50,000 in total returns, and that's so awesome. It's awesome to me. Maybe you don't think it's awesome, but I do. If you're curious what the kinds of things are that we've been investing in over time, I'll give you a little sneak peek into my Roth IRA account just now. And I'll forewarn you right now, it's not that exciting. It's not that sexy. Well, it is exciting and it is sexy because it gets good returns, but it's just kind of bland. You know, it's like the guy who gets rich by like having a fence rental company or something. It's not a very exciting business to talk about, but hey, he did well. Good for him. Here's our amazing portfolio revealed. So way back in the day, 7 years ago, I picked VTSAX for the vast majority of the portfolio, and I picked VBLAX for the rest. If you're a nerd like I am, you've heard of VTSAX before. If not, don't worry about it. Basically, it's a mutual fund that tracks the total stock market. So it would be like if you went through this giant headache of investing in every single individual stock that's out there in the stock market, and you put all that in one big basket, and that's what you invested in. That's what this is doing for me. And then VBLAX isn't stocks at all. It's another mutual fund, and it's long-term bonds. So it's kind of a bummer here. You can see that not only has VBLAX been outperformed by VTSAX for me, it's actually gone down in value over the last 7 years. As I see this little disclosure down here, this could be a good time for me to disclose this as well. Just because this happened with me and my stuff in Vanguard doesn't mean it's going to happen for everybody. Past performance is not a guarantee of future performance. Let's just clear the air. And then as an added sneak peek into my traditional IRA, you can see that everything is just invested in a target date fund. If you're not totally familiar, a target date fund like this basically tries to do all the legwork for you in terms of finding stuff that you would like to invest in if you were retiring somewhere around the year that's listed in the name of the fund. So for me, based on my age, some date around 2050 is kind of traditional retirement age. And so what it does is whenever you're young and you're investing in this, it's very, very aggressive. It's like everything in the stock market. It's kind of like a VTSAX situation. And then over time, it actually changes itself to get more and more conservative, to get a little bit less risky, to be focused more on kind of preserving what you've built instead of going after all the new growth. Because by the time 2050 rolls around, you don't really want to lose that money. And a lot of people prefer their portfolio to be a little bit more conservative and a little more steady by that time. So it's a total personal preference thing. It's all about what you want to see with your accounts and your money and what you believe and all that kind of stuff. This is not something that you can seek out and find the one right answer for everybody. But for me, in this account, that's what I chose. And it's also done well. If I zoom all the way out to my total returns over time, I've averaged 12% on that. So it's done great. Overall, I'm super happy with Vanguard. And even though it's not the most exciting thing to use or recommend to people even now, it's definitely worth using in my opinion. Whenever I very first started, I wouldn't have recommended this to somebody who didn't really know what they were doing. You had to be able to know going into it exactly what you wanted to do, what you wanted to invest in, how that needed to happen, and you had to kind of charge your way through their lack of a user interface. And now they've removed all of those hurdles. But it's also kind of an annoying thing that's been happening with Vanguard in the last probably 2 years that I'm not a huge fan of. It's just something I've noticed. It's something that I'm assuming is happening. I have no evidence or proof, but here's my guess. I'm guessing that in the last 5 years, somebody way up high on the Vanguard team of advisors or whoever does that kind of leadership role there has said, guys, we need to make more money. We need to get more people coming in here, paying us management fees. We need to crank up our profits, and we've got to do that pretty quick. And so they set out this plan to do more marketing, to make themselves more appealing to the average person, and to add more features and more kind of products and stuff so that they can crank up their profits. Why am I telling you that? Because it just sounds like basic business 101? Well, what that means for us is we get more solicitations from Vanguard than ever before. You're going to get emails in your inbox that are inviting you to try their new digital advisor, or to schedule a phone call with somebody, or to try and set up something that ends up making Vanguard a little bit more money. Is it terrible? Is it pestering? Is it spam? No, it's not that bad. But in the beginning, when I started investing with them, there was like none of that. You know, they were very content to just sit back, let people come to them, and they just did their thing. Now they're a lot more like a typical business, which reaches out to you. It's trying to get new sales. It's trying to reel in more fees. And I imagine that that's probably working for them. So in that way, I do kind of miss the old Vanguard that was very much like simple, not a marketing machine, very quiet and just results driven, but we can't have it all. So now it's time to make the change in my account. As much as I've loved investing with Vanguard over the last 7 years, something needs to change. And it's this that I just complained about a little while ago that I didn't love that I had gotten such bad returns from this little bond fund. It's time to get out of here. Thankfully, I can sell my investment in this bond index fund, not have any kind of tax thing happening because it's in the kind of a retirement account that it's in. I also wouldn't have any kind of taxes that I would be charged for this because I have a loss. But what I want to do is just get into something that's a little bit more aggressive than bonds. So to get here and make this happen, all I've got to do is on the very bottom, hit transact. And then my second option down is to start a new sale. So I'm going to hit sell. I'm going to sell my Vanguard mutual funds that are in my Roth IRA. There's the culprit, you little scoundrel, VBLAX. Get out of here, buddy. I'm going to go ahead and sell 100% of it because I just want to get out of it. So I can hit preview. I can hit submit. Boom. Done. That easy. Old Vanguard was not that easy. New Vanguard is. I can put up with some marketing emails, I guess. The core fundamentals that made Vanguard appealing back in the day still stand, which is low fees, a priority towards customers, and a ton of great options when it comes to the different things that we can invest in. Just for me personally, we've got IRAs, a taxable brokerage account, and a couple of different accounts for our kids just in our Vanguard. The total swath of financial products that Vanguard offers and the low fees that it offers them at still makes it really, really appealing, but there's just so much competition nowadays. It's wild. So if you want to see the competition and see how they stack up in my annual Best Investing Apps for Beginners video, then click that and watch here next. Otherwise, if you haven't subscribed yet, then make sure and click on my little face here in this bubble so that you can see the next future videos. Till then, it's time to hang up the axe and get back to not working. I was going to say get back to work, but when we invest in the stock market, there's really nothing for us to do. So I'm going to go to bed and I'll see you guys tomorrow. Bye.